Okay. Good evening, everyone. Welcome to the Calgary Real Estate Investment Forum, our CREW Real Estate Investing Seminar. This week, we're doing short-term gains, long-term vision with CREW Real Estate Investing. The reason we chose this topic is because we think that there are two parts to real estate investing, and we want to showcase what those two parts are and really dig into the numbers on different property types to show everybody out there what they can invest in and the returns they can expect.
Yeah, and what I love about this topic is that we know there's people sitting on the fence, Tim. We get phone calls all the time, and it can showcase to you what investors are doing in this market and how you can profit as well. And yes, Tim, it is hard to find the right properties. I mean, we're very strict on what we buy our clients. It has to cash flow. The numbers have to work. The rentability has to be 100%. We're aiming for zero vacancy. And you know what, we do that, Tim, because then our clients are making money and then they keep investing. So can you do it in this market? 100%. There are deals, and we wrote on one last week, as we just said, up in Varsity, where Tim, the burst on a burst strategy where we would add another bedroom into this condo, we were buying in at like 185, and the after renovation value was something like 260.
Yeah, and we're looking at renovation costs of anywhere from 15 to 20,000 tops on that property. So there's lots and lots of capital left in the project after you've renovated.
Yeah, and if you might be a flipper out there, and there's flipping strategies that definitely work in this market. And not only that, there are long-term holding properties. And Tim, we have been looking now at getting properties and adding our own suites into the properties, which add value as well. So,
yeah, the inventory of currently suited properties, whether it's legal or illegal, it's very low. So some of our investors are actually looking at putting in a small kitchen in the basement to create their own suite. And the numbers work about the same when you look at the purchase price of a property with a suite and one without.
Yeah, so this seminar is great. Thank you for joining us.
We're going to start off with, let me just let somebody in here. We're going to start off with analyzing a few properties to show you what the actual gains our investors are getting in the market right now. And we're using live examples. We took these examples off the MLS today. So these properties are still active. And if you want to take a run at them, just give us a shout. But before we get going with the examples, we're going to do a little bit of a refresher on why we got into investing in real estate. Now, these particular graphs, the capital appreciation and the mortgage pay down, they're going to come back into play in our analysis after the fact. But just to refresh everybody out there, this is why we got into investing in real estate.
Yeah, so I'll just go through these really quickly. And these are just simple graphs just to show you what real estate can do. And before we discuss this, we get this question, is the Calgary market going to continue forever going up? No, it's not. We know that. It goes up and down, but over a 75-year average, here it is. It goes up 3.5%. Tim, roughly this year, what are we looking at percent-wise? 6 to 8%?
Yeah,
probably?
We're way over the 3.5.
Yeah.
Year over year, over 75 years, it's 3.5%.
Yeah, year over year. You know what? People talk about timing the market, and people, you know what I don't like about when they talk about timing the market, they actually put themselves off because they feel they missed the boat. You've never missed the boat. We've got to be honest with you. You may have timed it wrong. I could tell you that Tim and myself, we owned over 25 houses here in Calgary, and we bought most of our properties at the peak of the market. Yep. And you might be thinking, well, why are you guys buying at the peak of the market? We normally buy at the peak of the market because everyone else is buying and our incomes are strong because we're realtors, right? So that's when we have the most money to outlay for deposits. So we're actually normally buying at the peak, but that's never worried us because we're always buying properties that cash flow. It doesn't matter what market you're in, there's cash flowing properties, and there's properties that you can make a killing on just simple doing the burr strategy or flipping or just doing a 3-year term on a buy and hold property and refinancing after that 3 years, pulling out $60,000, $80,000, $90,000, paying yourself some, and then going again.
Yeah.
So going over this graph, what it's showing is $400,000 at 3.5%. It'll be worth a little over $1 million in 25 years' time. The reason why we use 25 years, we'll go to the next slide here, is that a normal mortgage is paid down over 25 years' time. And the best thing about real estate is that the tenants are paying your mortgage, right? So if you get the right tenants, and right now, this market, the way rents are going, it creates lifetime renters. Okay, like I had a renter in one of my properties, Tim. How long was that? 30 years, something like that, right? So when you get a tenant like that and the property just continues to go up, I mean, we're actually, if you look at some of our videos on YouTube, we were telling people, don't gouge the tenants, right? Don't jack, because rents have gone up in maybe a 1 year period from $1,250 to $2,250, $1,000. So, you know, at the end of the day, if you do need to raise your rents because of more expenses on interest rates, and sometimes the condo fees go up because of insurance and the utilities, you know what, just explain to your tenant and bump those up. But over a 25-year period, this is what got us most excited about investing in real estate. I know the appreciation sounds great, but we always want to know what our worst case is. And whenever we run our property analysis, it's always on worst case numbers. But our worst case numbers, if we went and bought this property in 25 years' time, it would be paid off. And if it didn't go up at all, you know what, a $400,000 property paid off is a pretty good retirement. And if you times that by 2 properties or 3 properties, or when we first got into the business, team, I think we wanted 5 properties, right? Yeah. So we knew $2 million worth of real estate that didn't go up would be paid off. We even had another rate of return, which we're going to show you next, and that's the cash flow. So
yeah, and that $400,000 asset, you got to understand that this is a rental property. So your tenants are paying this mortgage down, and you're not the one paying the mortgage down. They're paying down that asset for you. And at the end of the day, it's worth $400,000 free and clear. That's the goal of real estate investors. The third one we're looking at is the equity that you're going to get in there. And the reason we throw this screen up here is because most investors don't wait that 25 years until it's all paid off. They always dip into the equity portion here between the appreciation and the mortgage pay down to use those funds to go again.
Yeah, and people always ask us, when is a good time to release that equity and use that to keep building? Well, it depends what stage you're at in your life. You know, if you feel the flexibility that you can use that equity and go and get another property, or if you're younger, yes, you should be more aggressive. And you should be bumping up your equity in the early days up to a 20-80 split. So you'd have 20% equity in the property and 80%. Now, I could tell you the condos downtown, this year alone, Tim, they were selling like in the 280s, 290s last year, the older ones, and now they're up to like 350, 340. So now people have $60,000 worth. So what are they going to do? Some people are going to offload, take that money and upgrade their personal residence or buy another rental property and stay out of the condo market. Some people may release their equity and then buy another property. It's up to you what you do with that. But that is the general rule. When you're younger and you want to be more aggressive, you keep bumping up your equity position. As you get older, you keep bumping up your equity position to get, you know, in a bit of a safer investment, you know, what would you say, spread there?
Yeah.
So
yeah. Well said.
Yeah.
So the next graph here, it shows the 3 rates of return. We've got the equity appreciation. We've got the mortgage paid on. The third rate of return is the cash flow. Now, when we start out and we buy these properties, whether you put 5% down or 25 or 20% down, your cash flow at the very beginning is not going to be something to write home about. We always have to tell our beginning investors that you're not going to retire on that cash flow as soon as you buy the property, because your mortgage rate is up here, your mortgage payment is up here, and your rent is right here. The actual cash flow is very, very thin to start. But over time, as these 2 graphs start to spread apart, your rents are going to go up with inflation or more if you have a nicer property, and you're going to start to see more and more cash flow over time.
Yeah, Tim, what's funny about this graph, it's showing $30,000 here, you know, the cash flow coming from these properties. You know what, these condos, some of them are producing $30,000 now. So, you know, if you had a few properties and you decide to sell a couple, you would be bringing in all that cash for later on. So is it possible? Yes, and one thing about real estate, I mean, what we do is get ourselves in position to take advantage of this. What we mean is that you have to take action to reap the reward.
Yeah.
And that's what our whole aim is. That's why we do seminars every 2 weeks, is to help you move forward. We've had people watch us for years, right?
Yeah.
And then all of a sudden they own 3 or 4 houses after that. So that's our aim. But this magic thing happens in real estate. It's happening in Calgary right now, not so much in Vancouver or Toronto, but in Calgary, is that you just get this growth, right? And that's the exciting part of investing in real estate. We don't know when it's going to happen. It's happening now. We don't know. We predict it's going to go for another year at least, Tim.
Yeah.
We believe our price points are still way too low for the supply coming in, and the inventory isn't there to feed it. So we just see this continuing. We get asked wherever we go, if it's kids hockey or out to a barbecue, everyone wants to know what's going on in the Calgary market. That's what's going on in a nutshell. It's going to continue. And if you buy real estate now, I had someone ask me, John up in my neighborhood wants to buy a condo. And he said, Azad, you know, I feel like the market's already gone up 50,000 this year in newer condos. We're talking about 2010 plus. And I'm like, yes, it has gone up 50 grand, but it's got another $100,000 to go after this. Yeah. So if you want that 50 grand to say, you know, I should have invested a year ago, then Tim, you know what, you stand not to make the next 100K. So.
Yeah, and I want to make one more point about this graph here. If you look at the cash flow after 25 years, we got it at 30,000 a year. That's at a conservative, I don't know, 5% increase in rent per year. So if you're making $30,000 a year in cash flow, your mortgage is all paid off. That most of that cash flow minus taxes and a few expenses is income. It's money in your pocket. And people always ask us when they're starting out, you know, when can I retire on my real estate investments? When does my cash flow make more than my current job does? Well, if you work out how much you're going to make in 25 years, if you're going to be earning 200K a year, then you're going to need what? You're going to need a number of these properties before you're making enough cash flow to replace that income.
Simple way to put it, but we've got clients already not only living off the cash flow, we've got clients that actually buy more houses with the cash flow they're earning from their rentals. So can you get there? It takes a team to get you there. We hope to be part of that team. We've seen it happen, and you can get there quicker too. Does it have to be 25 years? No, you can buy a bunch of properties, and as we said, either sell them, refinance them to pay off the first few, and get there within, you know,
it all depends on how aggressive you want to be.
Yeah, exactly. If there's any questions, please put it in the chat and we'll just keep going here.
Okay, so first part of the seminar is short-term gains. What are the short-term gains in real estate investing? Well, the number one thing that you're looking for in the short term is cash flow. Okay, cash is king in this business. I know it's an old and tired cliche, but it is king, because if you're not cash flowing on your rental properties, pardon me, if you're not cash flowing, you're going to become really, really dejected very, very soon, and you're going to throw up your hands and get out of the game, because nobody likes to take money out of their back pocket to subsidize their rental properties.
Yeah, I mean, cash flow, it has to cash flow. Tim and I can tell you, we wrote a book about it. And you know, once it's not cash flowing, your days as an investor are limited. So, you know, at the end of the day, there are cash flowing properties. We can't even believe the rents right now. Tim, we're talking $2,200 for a main floor suite in a half duplex, right? We're talking like upwards of $1,750 for a basement suite now.
And people renting rooms to students, it's $1,000 a room right now. That is the going rate.
And school's back in soon. Like I sent, Tim, we should send this out to everybody. I sent a 5-bedroom home out the other day that would make a perfect student rental. It's bringing $5 grand. That's without the garage being rented. The garage would be another $500. It was huge. So $5,500 on a $500,000 purchase. The numbers work all day long. Okay. And one thing we got to talk about is where do you find the deposit for getting into real estate? You may have to get creative. You may have to use equity in your current home, or you may have to do a joint venture with someone that puts in half the deposit. But these days, Tim, with the equity, it's getting harder and harder for people to put less than 20% down on a rental property if they're moving in and then one day moving out of it.
But there are ways around that. You buy a property, move into it with 5% down, you live in it for a period of time, and then you go and you buy another property, move into that, put 5% down. Now, one thing that I want to bring up here is the type of article that I really, really don't like these days is when some reporter will come out with this number saying, oh, now it takes a young person 27 years to save up a down payment to buy a property.
Yeah.
As I just mentioned, 4 or 5 ways to get the money right there, just off the cuff. If you have trouble saving up for that down payment and you need to find alternative ways to raise the capital to get the down payment, come and see us.
Yeah.
Because we will show you many, many, many different ways to raise that capital, to borrow that capital, to joint venture with somebody for the capital. If there's a will, there's a way.
Yeah.
Like if you want to buy those rental properties, you should be able to, and there's a way to do it.
Yeah, Tim, we've got a client, Alejandro, who's working with our team in Edmonton right now. He's doing a flip in Edmonton in one of the best communities there. He got a smaller house. And Tim, the spread on this thing, it was I think $350,000 purchase.
Yeah.
And just under. I mean, the renos are going to be a lot, like 120 grand. Yeah. But he's using Calvert Home Mortgage, which is a hard money lender. And he's been following us. He's bought properties through us. He's been following us. He joint ventured with his mum to help get the deposit. And the spread on this thing, like our realtor up there, Michelle, was telling us that the spread is something like 650,000. We're going to put this on Crew TV so everybody could see what's going up in Edmonton. So here's a guy that was stuck. He's using hard money. He's got his mum, and the cash flow that will come out of this thing will be in the $100,000 range, which will just help him go again.
Yeah, and he's doing all of this in a 6-week period. So he bought the property, he's renovating it, he's going to sell it, he's going to pay off his hard money loan, all within 6 weeks. So his carrying costs are going to be like a month and a half of mortgage payments.
Yeah.
That's how quick he's doing it.
Great question here from Prasad. Any chance of rents going down if the interest rates go down? Great. That's an awesome question. You know what? There is a lag between all of that. Really what drives the rental market or rental rates to go down is supply, and there is no supply. So what happened back in 2011 to 2022, basically, for a 10-year period, what happened there is the developers came into Calgary, massive REITs came in and built condo buildings. So some of these buildings you see behind us, they were purpose-built rental buildings. So when they got released, and we're not talking 1, 2, or 3, we're talking 15 to 18 buildings around downtown. So when they get released, 300 units get released at a time. And the thing is that all of those are rented. And to build those rental buildings again, you're in a 3-year lag. So will rents go down? It's like prices. They go down, they go up, they go down, but it's understanding where to invest. There's areas that I just don't love 100%, like the Beltline, because the Beltline can, produce high-rise rental buildings and then oversupply, right? But that's not going to happen for 3 to 5 years. So it's a good time to invest there, but you need to understand that could happen to that market. But somewhere like Lower Mount Royal, right? I've owned property in Lower Mount Royal. It has height restrictions. They're 4-story walk-ups, Tim. That's the max height you can get of a building in there. Not only that, it's next to the Red Mile where all the partying happens. There's Starbucks, there's pubs. We say that all the time. That's where these young people want to live. And so they will pay a premium to live in properties near the action. So you just need to understand exactly where you're buying. And that's our job as well.
Yeah.
Might be another question.
Okay. Comparing markets of Calgary and Edmonton, which one would you suggest for a novice investor who is looking to decide where to invest? If you're a novice investor, what we would suggest right off the bat is invest where you live. If you live in Calgary, start your investing in Calgary. If you live in Edmonton, start your investing in Edmonton. Always keep it close when you're starting because you want to be hands-on. Mm-hmm. Now, even if you don't want to manage the property yourself, you're going to hire a property manager. You want to be hands-on with that property manager because it's a sizable asset that you're buying. Even if it's a $250,000 condo, that's $250,000. Yeah. You don't want it, 1,000 miles away, something to go wrong with it, and you really can't do anything about it.
Yeah, and I've got to touch base on this because I got in trouble the other day. We have not in trouble, but I got a comment on YouTube. The thumbnail for our video was Calgary sizzles over Edmonton, and we just read out one stat. The stat was huge. The Calgary market has always been, Tim, slightly better, right? Just slightly better than we took off this year. When I say took off, there is a massive difference in growth than what's happening in Calgary and Edmonton. You have to work out as an investor, what are you after? Are you after safe, cash flow, not that much, and then not much appreciation, or are you after a boom and put a lot of money in your pocket straight away? That would be the question. It's like, would you want to go to Winnipeg or Saskatchewan or Edmonton? You know what? For some investors, that is 100% fine. I know if you're looking to buy an apartment building, you'd be looking in those cities because they're way more affordable. They're just out of reach in Calgary. Now you need to put so much money down on a small apartment building. I'm not talking about a huge apartment building. I'm talking 6 to 12 to 15 units. You know what? It's so expensive that even I would go to those cities to look at. I mean, we did, Tim, to look at buying in those cities for that. But if you're after a quick appreciation, the writing is on the wall that Calgary is going to do very well, and we're nowhere near the growth where it should be. So I hope that understands. That may take a meeting to discuss that further, but the next one is instant equity. That's what we're just talking about. Yeah. So, on this short-term gain, instant equity, you got to ask yourself, do you want to put $50,000 in your pocket next year? Well, if you do, we nearly bought a property in Varsity next door to Market Mall just the other day that would have done that in this market.
Well, we already did with an investor. We've talked about him quite a bit. Yeah. He's our BRRR specialist, Graham.
Yeah.
He bought a property, a 2-bedroom condo in Arbor Lake for $190,000. Yeah. He had it appraised to get it refinanced, and it appraised at what, a $260,000?
Yeah.
Yeah. So there's $70,000 of instant equity just because he took action and bought the property.
We have clients that just bought in vitro, right? They bought for $385,000, and we know that property in 2013 was sold for $436,000. So we already know, we're not asking for a miracle here. We already know that client is going to make roughly $50,000. Now, people might not take might take a year, might take 2 years, but we already know that price was already there, and with the inventory not going up, that property is going to get back to where it once was, and it should even be at $550 at the end of the day. Yeah. So there you go, and that's why Tim has got short-term gains. Instant equity, perfect question for this, because it's up to you what you're after.
Yeah, we've got clients right now that are scouring building by building, looking at the sales history and the sales data from these buildings to see which ones are undervalued, where their units are undervalued in those buildings, because they're looking to pick these units up and quickly turn them over if they can see comparable units selling for 40, 50, 60,000 more in the same building.
Yeah.
So can you make instant equity even in this market where there's crazy multiple offers and prices are going up? Yes, you can. We've got clients doing it right now.
Just going to answer one more. Shireen's got a question here. Shireen, great question. Can you put 5% down? What types of properties? Shireen, you could put 5% down on any type of property that has less than 5 doors. Once it has 5 doors, it goes to a commercial property, and then the lending is different. So if you're buying a 4-plex, if you're buying a duplex with 2 suites, upstairs and downstairs, you can put 5% down if you're moving into one of the suites. It does get a little tricky when you do get a duplex. If it's not legal, you have to normally get the tenant out, move in upstairs, and then put a new tenant in. The bank, for some reason, they still haven't changed that, where if it's not a legal suite of property, they want it vacant. They want vacant possession. And you know what? This is a little trick on the market. We're seeing this right now. Tim came across... Well, Tim, you're going to talk about 2 properties here. Well, you're going to get a really good trick coming up here to watch the properties and why they're still on the market and see what's going on with that.
Okay, so moving on with short-term gains, we're going to do the analysis on a few properties. The first one we want to look at right here, let me just see if everything's out of the way. Okay, perfect. The first one we want to look at is a condominium. Now, it's a unit in the Beltline in one of the smaller buildings. It's not a high-rise. It's a building with 1 elevator. It's 4 stories high. The address is right there, 1029 15th Ave. It's on the market right now, and the list price is $299. Now, why is it still sitting on the market when it's under 300,000? It's a renovated unit, so it looks really, really good inside. You rent it out in a heartbeat. There's 2 bedrooms, 2 baths, in-suite laundry, comes with an underground parking spot. It's very close to everything downtown on 15th there. What we're seeing is these units are being snapped up as soon as they're on the market. But the thing about this unit is it's got tenants in there until, what was it, end of October this year. So someone who's buying a condo who wants to move into it, say they want to get in at the end of September, the end of August, they can't buy this unit because they can't even take possession until the end of September. You can't just kick a tenant out. You have to wait till his lease is up.
Yeah, 90 days. So this is a great example of how to get a deal in this market. There's 2 ways to do it. One is when a property gets overpriced and it sits and sits, and then you go in and get a deal when the price drops and drops. And the second way is when it's tenant occupied and you have to wait 6 months for the tenant. I would take that all day, even if it wasn't cash flowing, because you can, in your offer, you can write anything you want in your offer. You could actually get the current owners to subsidize. We've done this before. Subsidize if the rent, say, Tim, is $12.50. He may have to give us a discount off the price. Because now we have to carry it, say, for $2,000. So we're looking for $800 a month for the next 6 months. He may have to subsidize that off a reduced purchase price to accommodate us buying that unit. So there are multiple ways to get this unit and make it work. A quick shout out to Sonny. Sonny, I'm liking your comments right now. He's liking the community. We're liking Sonny. Anyway, this is what we do every 2 weeks. If it's new, please go to work tomorrow. If it's new to you, go to work tomorrow and tell your friends about us. That's all we want out of this. But here is a unit, Tim, and where do we think this unit's going to? You're buying it for $300,000.
No, 285. That's why we can't take possession for a long time.
So
that's where you can get a discount off the price. So the numbers that we've thrown in here, it's 57,000 down. That's your 20% down.
Yeah.
So these are actual numbers right here. A mortgage of 5.49%. You're looking at 1390, taxes 149, insurance $50, maintenance 85. I just put that in there because it'll only be interior maintenance. Condo fees of 543, which is pretty standard. Actually, it's kind of low for a 2-bedroom unit. And vacancy, we always put vacancy into our analysis at 1 month every 2 years. Because generally, if you have someone for a 2-year term, after that, you might want to have it vacant while you spruce the place up a little bit. So we throw that in there all the time. So there is vacancy in our analysis. And then when we look at the rent, I've got $24.50. That is actually less than the going rent for a renovated 2-bedroom unit in the Beltline.
Really?
It's crazy. Some of these high-rise towers here, if they're less than 5-10 years old, people are charging like $3,000, $3,300 a month for a 2-bedroom unit. If they have a nice view and maybe if they have 2 parking spots, things like that, but it's very, very high rent. So our monthly cash flow, like we said in the intro, it's not something to write home about. It's $131 a month.
Don't work out there.
Yeah, but if you look at your mortgage pay down, and this comes right from the mortgage chart that we've been working off of, $482 a month, and the projected annual appreciation, $831. You're looking at monthly increase or monthly profit of $1,444.
Yeah, and those numbers are low, Tim, because even the $831 projected appreciation on a 285 unit, it's like you're at 3.5%.
3.5%. Yeah.
So right now it's going up 8-9.
Yeah, I'm not going to throw 8-9.
I know. But the condo market's going to be very strong. So Tim, when he adds all of that up, this is what you guys have to understand. Even in this market, you're getting a 30% return on your money.
Yeah, on your initial deposit.
Yeah, so you have to understand what this little condo is going to do for you. And it's something that if you're a first-time investor, what's better, a condo or not a condo? If you're a first-time investor, a condo is not bad. It's not as stressful. You just got to get into a good building and make sure that, it's well managed, properly managed. Because when you're buying a condo, you're buying into a corporation, basically, and you're going to make sure that corporation is looking after things like reserve fund and maintenance to the building and the upkeep. So, you know what? This is a great little investment, $57K. you're making 30% on it. And this is going to continue for the next 3 to 5 years from what we see on a condo. Okay, just getting to Sammy's. If anyone's got any questions on this, just throw it in there. We will be happy to answer that. Sammy, you got a great question there. They're not all great questions. I know I've been saying everyone's got great questions, but tonight they're all great questions. You guys are educated. Are lease options are viable in this market as an investor? Great question, because Tim and I have done over 100 lease options in the last 15 to 16 years, Tim.
Yeah.
And so we can tell you, no, it's a terrible time to do lease options, because when you do a lease option, what you have to do, just explain it to everybody. A lease option is, and everyone's learning right now, a lease option is when you go rent a property, okay, and you may have the ability to sublet that property. So you're renting it, you have the ability to sublet it, which means you could rent it to someone else for more money. That could be on an Airbnb, which is something totally different. That's called Airbnb arbitrage. But a lease option is when you get to buy it at the end of the lease. The problem with that, Sammy, is that you have to have a predetermined value. Okay, and normally a lease option will go for 2 years minimum. I wouldn't do 1 year.
Nope.
I would do 2 years to 5 years. We've done max 5 years, so that'd be max. They're hard to get. And then predicting out what that value will be in 3 years, 4 years, 5 years, Tim, it would be even hard for us.
Yeah.
So I would do it on a very high-end home, maybe in Elbow Valley or something like that. I don't know, but not on, it's very hard to do right now. No, we're not in the market for that. Tim, you want to read the next one?
The next question. I'm finding appreciation in Calgary. Downtown condos are not appreciating at that rate. Hearing 10K over 5 years, if you're lucky and not losing money. Thoughts to share here? Thanks. I want to talk about this because not every condo downtown is the same. When we go looking for condos for our clients, we have a very specific criteria for them to buy to make it a rental property. It has to have some sort of wow factor. You're going to go into some of these towers and you're going to find hundreds and hundreds and hundreds of units that are all exactly the same. They're all looking right at another building. They're shady in there all the time. There's nothing, wow about them. They're basically a hotel room. So if you're in that type of unit, no, you're not going to see the appreciation that we're seeing. The units that our clients are buying always have a wow factor.
They have to be in a good building. They have to be in a good area. We're just talking about that. If you've read our book, Fearless Real Estate, we don't have a copy on us today, but we go through blue chip areas. What makes a blue chip area? Restaurants, pubs, all like shopping, boutique shopping. If you're near that, what areas are we talking about? Marta Loop, even Bridgeland right now. Bridgeland has a brewery. I didn't even know it has a brewery, and it's got a distillery in there too. Yeah. So Bridgeland is the next one that's up and coming because the C train's there. Bridgeland was so seedy for a little while. Kensington, we love Kensington because you have the university, you have the hospital up on the hill. You can walk to downtown. That is a wow factor. You can walk along the river every day or hop on the train if you choose to. Lower Mount Royal we talked about. So there's different Inglewood's coming up now, right? So there's different pockets of the city that we would put you in that we know you're going to make that, what are we talking about, $10,000 a year? We're going to
over 5 years.
We're going to blow that away each year. Okay, as Tim said, we bought Graham condos this year that have gone up $60,000 this year alone.
Yeah, and
like this year alone.
As I spoke about Kemi, who just bought a unit in, what was it? Citadel. I walked into this unit. It was vacant at the time. All the furniture was out, and all you could see were these giant windows looking at this green space. You weren't looking at a neighboring unit. You weren't looking at, the parking lot. You were looking at a beautiful green space, and the windows were huge. That's wow factor for tenants. That's the kind of unit you want to buy. Yeah. So I don't know if you're finding that, as Tim said, you got to compare apples to apples, and you got to get creative and get those properties that you would live in. That's what you talk about all the time. Yeah. If you would live in it and it's nice, and as we always say, we want our landlords to be proud of what they own, right? Be proud that you're creating wealth for yourself. Be proud. I got in trouble on this too, Tim. I said, be proud you're providing, I shouldn't say affordable housing, but you're providing housing. Yeah. Let's just say that.
What we're saying is in the news right now, there's students that are coming back to the city, starting to come back. They don't even have places to live. So this, there's opportunity for you to do this and make the money we're talking about.
Yeah. Okay, so we're going to move on to a half duplex now. This one, it's only been on the market for 4 days now. It's in Glenmorgan. We talk about the Glens all the time, Glenmorgan, Glendale, Glenbrook. They are 3 communities that side up against Sarcee Trail. They're on the east side of Sarcee Trail, but they're on the west side of the city. Great rental properties in these communities. What we're finding right now is they're being priced too high and the numbers don't work anymore. We used to put tons of clients in there. We can't do it anymore.
Yeah, it's so expensive, but you came across this one.
Yeah, you can do it in some half duplexes. Now, if you try to find a half duplex in Glenmorgan it's listed at $419, you're probably not going to find them for very long. Why is this one there on the market for $419? Because the tenants on the main floor have a lease that expires in May 2024.
Yeah.
So you have to buy this as a rental property. You cannot buy it as a principal residence because the suite's illegal. And you have to assume these tenants for the better part of a year.
Yeah, so the problem with that, it limits the buyer pool. Okay, so you got to get creative. There's creative ways to do this. If anyone's interested, call us. But at the end of the day, a normal buyer, Tim, can't buy this because they've got to put 20% down.
Yeah.
So if you're doing the move up program, like I think Shireen was talking about, this one won't work because you got to take possession May next year to make that happen because it's illegal. Okay, so now whoever listed this, they're kind of stuck. They're waiting for that investor to come by to put this deposit down. Now, is it possible? Yes. And there are ways around doing that, but you know what? It limits the buyer's pool. That's why this property is sitting on the market. And that's why it's priced so aggressive as well.
Yeah. If it was vacant, ready to go, it would probably be listed at $499 and sell for $5.25. But if you could take on these tenants with the crappy lease and ride that lease until the end of May, you can't lose with this property. So let's delve into the numbers a bit. At a $420 purchase price, your mortgage payment at $549 is going to be just over $2,000 a month. There's no condo fees because it's a half duplex. So your total expenses are $2,695. And with both suites rented out, the top floor getting $1,800. Now we've seen way more than that. But 18 is pretty conservative and $1,200 down. We're also seeing that $1,500 is a basic amount for a downstairs unit right now, if it's decent. Your cash flow is over $300 a month. That's very good for a starting out unit.
Yeah, so your cash flow is $300 a month, your mortgage pay down is $542. And then we already think that this property, if someone went in and put a bit of lipstick on it, we're talking paint, maybe floorboards or nothing major, maybe change the pulls on cabinets, Tim.
Yeah, I think the cabinets might need to be painted.
Yeah, so whatever, it could be some elbow grease. There is close to $100,000 in this property, and it's just sitting there on the market. I bet one of you is a realtor that's going to go buy this tomorrow, and we'll lose out. But don't worry, we'll find the next one, and we'll give you that one too. But anyway, you know what? It's a great property. What's funny, all the time we get calls from Toronto, and the first thing they say is, "Well, how do we know you're not going to buy the property? We can't buy everything. Like we see that many deals." We can't buy everything. So we need to stress on that because I always get that question. I'm like, holy smokes, what are they thinking?
Yeah, because if you look at the market today, there's probably 10, 20, 30, 40, 50, potential great rental properties out there. There's no way we could buy that.
Yeah. We just understand which ones are good deals and which ones aren't, right? We see what people buy sometimes. We're like, oh, geez, okay. If that's what you want to buy, no problem. I mean, we're pulling out of deals right now. We're going into multiple offers and we just cut it off. We say we're not paying that much for that property because we know we can get you a better deal elsewhere. And you know what? Our clients, we've told them, you be patient, we'll make you the money.
Yeah, if you're competing against an emotional buyer that really wants that house and wants to get into that community as their first home purchase, you're not going to win against them if you're in competing offers. They have an emotional attachment to that house and they will go over the point where the numbers don't work. They don't care because they're going to be living in it. They want to live in it. It's going to be their dream home.
Yeah.
If you're an investor, you got to stop when the numbers don't make sense.
But who you're competing against in this, I mean, what we're seeing out there, Tim, when we were shopping, is big families. Like you'll get the Filipinos that will move over. I don't know, I'm not just going to say Filipinos. I've got to bring up someone else here. Indian families, let's just throw the Indians. The Australians, for some reason, they don't have big families and they don't move to Canada. But anyway, you're getting these big families moving into these properties, and it could be a couple of generations in there, right, Tim? We're seeing that. We'll see like the husband and wife and the kids, and then the grandparents downstairs, and they're fighting over these properties, and then there's bidding wars, and then as an investor, you can't compete against that. You just
because they have 4 incomes. Like the father and the mother, they both work, and the younger generation, say the husband and his wife, who are raising 2 kids, they'll live in the basement. They both work. So you got 4 people that can, afford this $84,000 down payment, and then bang, they're in that house, and everybody's living for very, very inexpensively.
The property we just got in Citadel that we keep talking about is we're just so happy for this young girl, because she's been following us for a while on exactly what you guys are doing, and she finally took action. Anyway, we turned up there. There was 12 realtors with their clients going in at the same time slot I had. Like, we're talking, I think I had 6 to 6:30 on a Thursday evening or something. And I just said, you know what? I've got the keys. You guys all come in, everyone in. And we all went in, and there was a family from Edmonton. And I was talking to them, and they said they came from Edmonton. I think they're going back to Edmonton because they just can't find a place. They keep trying to buy a place. And he's like, what's going on? And what's going on is that's what's affordable. Anything under 300,000 or 400,000, that's where the most drive is in this market. So there's multiple offers, and you got to pay way above list price just to get in the market. Yeah. So this is another one. You know what? The numbers come out the same. If you guys look at it, the numbers come out the same at 30% return on this property compared to a condo. But the difference between this property and a condo is a half duplex will always appreciate a little more, depending on the condo. Depending on the condo. But from that condo that I've seen, for a little bit more deposit, I would rather put my money in a half duplex. And the reason why I love a half duplex is you always have the potential maybe to buy the other side. And when you own the other side, now you have a fourplex, and you could make it legal. And a legal fourplex in the Glens,
well over $1 million.
Over $1 million. And what I love about owning a legal fourplex, which we're going to talk about exit strategies later, is that, man, you can knock it down and build 4 brand new townhouses. So huge upside on that. But once again, it comes down to the investor.
Okay, we'll go to the third property we're analyzing here. It's a house in Highland Park with an illegal suite. If you look at the list price, it's just under $500,000. Now, why is this one still on the market? Why is it sitting there? The thing about this unit is it's a little bit small. It's about 860 square feet, but it still has a fully developed upper suite and a fully developed lower suite. What we like about it is its location. It's on 32nd Ave, right close to 4th Street Northwest, right by Queen's Park Cemetery, a little bit east of Queen's Park Cemetery. So it's in a very, very nice neighborhood, close to everything on Center Street and 4th Street Northwest. Easy to get to downtown really quick. And it's on I believe it's a 45-foot lot. So it's not even a 50-foot lot, but the city allows duplexes to be built on those smaller lots in the inner city communities. So you can redevelop down the road into a duplex. In the meantime, though, you're getting great cash flow all along. If you look at our numbers here, this one, looking at a rent of $2,100 up. The reason it's $2,100 up is there's a big double garage out back. It's actually split, so you can use it for up and down, but we've got it all built into the upper rent here, and $1,350 down. It's a nice 1-bedroom suite down there, so that's why it's $1,350. Total rents of $3,450 a month, and you look at your total return, we're at 28%. So we're right around the same return percentage, but your appreciation over time, because it's a single family home, more inner city, it's going to appreciate a lot more than the first 2 examples. Yeah, so this property here, once again, it's been updated. The roof's been done, the windows. I didn't have time, Tim, to look at the furnace and stuff like that. But you know what? It would look turnkey to me. So that is what we're always kind of looking for, is something that's move-in ready. You don't have to fix it up or anything like that, unless you're doing things like mortgage plus improvements. But this one's
ready to move in. The lot value alone on this property will just continue to go up. What's happening in this area in Highland is that these homes are getting knocked down and they're building $1 million homes.
Yeah.
So you want to be as close as possible to something like that. And, you know, it's a proven community, you know, like at the end of the day, it will rent out 100%. And then, you know, but if you're not in this budget, it's not for you.
Yeah.
It's as simple as that. Yeah, it is a little bit smaller. I've owned smaller, you know, up down suite of properties. And the funny thing that people don't realize is if they're attached or they're a little bit smaller in size, they still rent out for the same.
Yeah.
If the appeal is there and we say the wow factor is there, like a double car garage or, you know, next to parks or something like that, you know what, or schools, people are just going to rent it. They don't care if it's 100 square feet smaller. Where will that affect you later on, Tim, when you go to sell? It will sell a little bit shy of what the bigger homes will sell
Yeah,
for.
but you're getting in at a lower purchase price. You're getting in at $495. If it was a 50-foot lot and a 1,200 square foot bungalow, you're looking at probably $600,000 in Highland Park where it is. So the single family homes, we're getting more appreciation over time. We're going to get probably a little less of a return percentage, but we're there. For us, the single family home is always a way more solid investment than all the other investment types.
Yeah. I mean, the return year, your appreciation will far outweigh, especially Tim, when you look at the purchase price, the average in the city for the detached homes is 642.
Yeah.
So we're well below the average, and that's what investing is all about. And Naveen's just got a quick question here. Can illegal suites be converted into legal? Is there a value in converting them? Naveen, that is the best way to make money. Okay, we got to tell you, we've converted illegal suites for $2,300 and made $50,000 off them. So yes, it is. It's hard to find them. What you want to do is you want to find the illegal ones. You know, it's harder, Tim, when you don't have a kitchen at all.
Yeah.
So you want to at least have the kitchen there, because then the city will grandfather that in, and then you can go by today's code, which will save you a lot of money converting that into a legal suite of property. It's estimated that Calgary has roughly 32,000 suites in Calgary. And Tim was looking at stats the other day that we just hit roughly over 10,000 legal suites.
Yeah, we've got a legal suite registry in Calgary here, and we've gone over 10,000, which is a really, really good sign, because all these landlords, not only are they increasing their cash flow, but they're making these suites safe for tenants. And that's the number one thing we look for when we're buying suited properties, is you want it as safe as possible so that the tenants are comfortable. They'll stay longer. They'll pay higher rent.
Yeah. And one thing, just Naveen, on that we get all our clients to convert their suites into legal suites eventually. Okay. And we help them with it. We have a contractor that works for all of our clients. Like, that's what he specializes in. He's done many, many, many legal suites or conversions. And the reason why we do that is when you convert an illegal suite into legal suites, the banks now will calculate all those rents coming out of that property. If it's illegal, they only count the upstairs. So now with current rents being at $34.50, you want that income, which will help you, it will add to your income, which will help you
qualify for the next one. Yeah.
The next one. So we have a whole system just in what you're asking, and it is honestly the best way to make money in real estate.
Yeah. So these are the short-term gains that you get right away when you buy real estate. You get that cash flow in your first year. You get a little bit of appreciation. You get a little bit of mortgage pay down. And you can also get instant equity if you buy those properties in the right locations at the right price. Those are the two things that we want to let you know about for short-term gains. After that, there's the long-term vision part of our seminar. Azad came up with this seminar topic, and it actually works out quite well, because with the long-term vision, what you're trying to do is you're trying to look at the life of that investment. If you own those properties for 25 years, that mortgage is going to be paid down, and you can look at the end value of these houses at a conservative 3.5% appreciation rate. If they don't appreciate at all, that's fine. You still have the value that you purchased it at, free and clear. The mortgage is all paid off. But we always have appreciation in Calgary, and I don't think it's going to be 3.5% a year for the next 25 years. But conservatively, you're looking at that little 2-bedroom condo in the Beltline, and it's going to be worth $650,000 in 25 years.
Yeah, and you guys might be, oh, 650,000. You guys are crazy. No, we're not crazy, because like a 1-bedroom unit in Vancouver is over 650,000. So we're not crazy, and we're working with those people coming here saying, I'm done with Vancouver. So we already know Calgary is the next best city. I don't care if you're from Winnipeg or Saskatchewan or you're going to yell at me. Calgary is awesome. And why? I'm not just saying that. We have the infrastructure here, right? We have the Calgary Flames. To be honest with you guys, we can handle it. Our roads can handle it. It's built for expansion.
Yeah.
I mean, our property taxes are lower. Our taxes are lower. Like we're landlord friendly. There's so many reasons. We do a whole video on why people should invest in Calgary. Just go on our YouTube channel and you'll see an hour worth of things that we go through. And I am super excited to see this city, Tim, in another 10 years of where it's gone from today till 10 years later. It's going to be awesome.
Yeah. And moving on now, the long-term vision on that half duplex, you're at $1 million. I think I get 958 because the first year that I put there, if you do 25 years, the first year it's going to be worth that little appreciation after the first year. So I would actually have to go one more year on my graphs. I just thought about that right now. So you're at $1 million on this half duplex. What can you do with that duplex in the long term? You can legalize that basement suite.
Yeah.
You can buy the other side.
Yeah.
You can legalize the other side's basement suite. So there's many, many things you can do in the long term. But the number one thing you're looking at in the long term is your property appreciation. When you buy that unit for under $500,000 and then in 25 years it's worth $1 million, the mortgage is paid off, you can't go wrong.
Yeah. You know what? You guys might be sitting there thinking, geez, you guys, your numbers are crazy. But we were buying half duplexes in Bowness last year for $385. We were buying them up as much as we could. And now you can't get in there. We're talking 1 year later, okay? You can't even get in there for under $500,000 on that same half duplex. So once again, there's a video on our crew TV.
Yeah.
It's just a few back. Cole, we're in the half duplex explaining how we did everything. And the kid now has got a couple of these and made a couple $100,000.
Yeah.
So
okay, the third one was the little house in Highland Park we looked at a conservative 3.5% increase. They're at 1.13 in 25 years. Now, we always talk about people owning $1 million worth of real estate right now, or as soon as they start this and being on the journey to get it. Now, all you need to get to that $1 million is one property, but you're not going to stop at one. You're going to want to buy more. And if you have 3 or 4 of these, then what kind of retirement is that when you have $4 or $5 million in the bank?
Exactly. And you know what it takes? The reason why a lot of people fail at investing in real estate is that they don't have the team. Like I've even got friends that don't even know how much real estate I own because I don't even want to talk about it to them.
Yeah,
right?
Same here.
I'd rather talk about drinking beer and whatever we can do. So, you know, at the end of the day, you need people around you that are like-minded, that understand what you're trying to achieve, and that you have support. That's what it's all about. And there's amazing things that happen. We see our investors do deals together, or we see joint ventures, we see flips, we see Airbnb stuff going on.
Yeah.
Like it's up to you what you want to do. Quick question here from Jay. In a long time, the price of the condo will be increased, no doubt. However, the property will also get weaker after 25 years. Then still its value will be the same or not? Great question. So a house, that's where the maintenance fees come into it. You have to really 25 years, you're talking new roof, maybe new furnace, new windows. So you know what, when we're buying properties, we're trying to get most of these things included off the bat. But that is a great question. The land value alone on something like this Highland Park property, though, will be worth so much because someone will just tear it down and build on it, that the value will still be there. On condos,
yeah, well, in regards to the question about the condo, in 25 years, you're paying that $500 to $600 condo fee every month over those 25 years. So if you plan on owning a condo for 25 years, we suggest you get involved, get on the board, and make sure that the reserve fund stays healthy. The maintenance schedule is kept up all along the way. So you don't want someone on that board lowering condo fees and not doing any maintenance at all. You have a vested interest because you bought into a condominium. It's sort of joint ownership of all the public space in that building. You bought into that, so you have a vested interest to make sure that it's upkept. And when condominiums are run properly, and they have a regular maintenance schedule, they have the windows done every 20 years and the roofs done every 25 years, whatever it is, that is all accounted for in your reserve fund. That's why you're paying your condo fees, to make sure the property is maintained and upkept over the years.
Yeah, it's up to you. Like, I own properties in Australia, they're condos because I'm not there. So it's like, it depends what you want to invest in. The condos I have in Calgary, I actually want to offload them and pour that money into houses. So like, special assessments will come up in condos. I like the short-term gain condos because you can see what's happening. You can see them going up. They've gone up roughly, from downtown condos, gone up roughly 12% in the last year, roughly.
Yeah.
So that's huge, you know, $30,000, $40,000, $50,000, and it will continue to go up just because of the affordability. So Jay, to answer your question, it comes down to what's best. Do you think buying a condo, townhome is a good investment? Someone's asking now. Payne, you know what? I love townhouses. The only reason why Tim will say it all day long is because the condo fees are lower on a townhouse because you don't have the 2 elevators. You don't have the extra amenities. You don't have a massive tower. We've been in massive towers lately because everyone's buying condos. We're in Vitro, we're in Allura, we're in Union Square. And I'll tell you, I used to be okay with heights. I don't know what it is. I couldn't imagine barbecuing up on the 17th floor. Man, that is high. And it gets windy
up there.
It gets windy. So do I think a townhome? I would take a townhome for me personally, but it's hard to say. Are you looking for short-term gain? That's what this whole seminar is all about, right? If you're after short-term gain, those condos are going to go up another $100,000, and you can make townhouses are going to do that too. Because guess what? Half duplexes, okay. What happened is we used to find detached homes. We could find detached homes all day long after $500,000. Now we can't find them under 600,000. Okay, like Tim found this one. Tim, that's a great job you found that one, but it's very, very hard to find them. So what happens is the buyer pool, the majority of buyers just trickle down, and the next best thing from a house, everybody's dream is to have a house, right? So the next best thing is a townhouse, especially if they've got a puppy dog or they've got kids, right? So, you know, you get a townhouse, and now the townhouse market is gone ridiculous. Every townhouse we bought last year, we were buying in Seaton, we were buying out the lake here.
In Evanston,
Chestermere. Airdrie's on fire. All those townhouses are just going crazy right now, just because that is the next best thing to live for people if they don't want to be stacked on top of each other.
Yeah, and you got to think the buying pool is the same as the rental pool. People who don't want to take, they don't want to mow a lawn, then they'll get into a townhouse, but they want ground level and they want their own personal garage. They don't want an underground parkade. A townhouse offers that. You can just drive right into your garage, walk inside the unit, and you're there. You can have a little backyard, like Azad said, for a puppy dog. Mm-hmm. There's many, many pluses to a townhouse that attracts tenants the same way it attracts homeowners. Yeah. So yeah, townhouse makes a great investment. The issue for us right now is finding ones where the numbers work.
Yeah, and we're finding them.
Yeah,
they're good. So okay, next slide here.
Okay, so long-term vision. The second part of the long-term vision we're going to talk about is exit strategies, right? What are you going to do in the long term with this unit that you have? And we're going to show real life examples of what our clients are doing right now. This is the part we love. We love to talk about the clients and what they're doing and the successes they're having. So these two pictures right here, the one on the left, this old 100-year-old house in Bankview. We had a couple of clients, Bob and Brenda, they bought this house with the intention of what were they going to tear down, put up a duplex or something?
Yep.
Well,
they came to us.
The lot was so big, they wanted to partner with a builder and go really big.
Yeah. So they partnered with our developer, Martin, and basically we ended up knocking on the house next door, and we actually bought the house for them next door, and then they put up these 6 townhouses. So they actually bought this or built this for their retirement, but in the end they had opportunities out in Ontario, some more development opportunities out there, and we ended up selling each unit. And Tim, if they did have still those units today, they would have made absolutely killing on top of what they've already made. So But long-term vision, we always look at properties having exit strategies. So a condo, it's really one strategy. You buy it, it could be an Airbnb. It could be actually a furnished apartment, which is coming back. It's coming trendy again, we're seeing. So you could do multiple things with an apartment, but really the exit strategy is you just sell it, right? But with land, you could do multiple things. And that's why we always, if you can afford it, we always like going down that road, because you could build a duplex, you could build a fourplex, you could build townhouses like this, or you could build a small apartment building, right? So exit strategies are very, very important when it comes to buying your right property. And you might not want to hear this if you're just starting off. You don't want to go and hit a home run on your first time up to bat, okay? You actually want to maybe delay gratification and start off smaller. We get people, Tim, they want to own an apartment building. We're like, no, don't do that, because as soon as you do that, all of your resources have gone, borrowing capacity, your deposit.
You used up all your money.
Your hoops, right? So sometimes we get people, and I think the next slide here, we'll just show you, or it's coming up a few people later, so we'll get there. But we get people that just continue to buy because they did the right strategy, Tim. So here with long-term vision on basically having a detached home, both of these clients here have actually legalized the basement suites. And Daniel on the left here, he went through the process of basically putting in a brand new kitchen and going through all the hoops with the city with our guidance. And then this is Yemi here on the right. He basically went through and
legalized an existing suite.
Legalized, and they both bought correctly where they were cash flowing from day one. And now by legalizing, they were able to buy more properties on top of that. So
that's another exit strategy you might want to do, like as I'd said, with a single family home or a half duplex. Again, long term, what do you want to do with these properties? You got to think about that when you're buying them. We always tell you to at least start thinking about what you're going to do with this investment down the road. Are you keeping it for 5 years, for 10 years? You're going to go the full length of the mortgage, 25 years. What do you want to do with these properties?
Yeah, like Daniel's on the left here. We bought him this one. It's a corner lot up in Huntington Hills. Now, a corner lot, they're not there yet, but infills will start to come up. This is prime for redevelopment. And right now he can hold on to that property because it's legal, achieve the rents he wants to achieve, and then, do whatever he wants later on. So yeah, it's possible.
So another exit strategy is sell your property to buy your dream home. Now, both of these pictures of clients who had a couple of properties, and on the right there, it's David, and on the left, it's Karsten. They sold their properties to buy their dream acreages. They both bought acreages with selling their existing properties.
Yeah, so, at the end of the day, you may not want to own a whole bunch of properties. You may just want to get to your goal. These guys, we can tell you, David owned 3 rentals. He didn't even have time. David's on the right, the young kid. We called him Google Boy because he made so much money on the internet. Anyway, he didn't really want to be a landlord. No. He was so busy with his business and was doing so well. And then we went down south. Where is that?
Deer Ridge.
Yeah. Down there, bought him a rental there. He owned one up in Winston Heights. Yeah, and then he owned another one. And now the big acreage is just south of the city near that beautiful golf course down there. So, and then Carsten's up north, up in Bearspaw up there. Same thing. We bought him a rental in Kensington. Yeah. And you know what? Next at the bottom of the hospital, actually. Parkdale. So it wasn't Kensington. And he just sat on it, lived in it, and didn't want to be a landlord, but then took the profits from that, took our guidance, and picked the right time to buy an acreage. Hit a home run. I think that's 4 acres up there. Yeah. And
right beside Katrina LeMay Don's acreage.
Yep. Famous Canadian. And both properties have done extremely well, where if they were to buy today, Tim, they may not have had the funds to do it.
Yeah. So that's one exit strategy using long-term vision. David acquired a couple of rental properties. Was it 2 or it was 3? 3 rental properties, held them for a number of years, let the equity build up in them, liquidated them, and basically bought this $2 million acreage that he's living in right now down near DeWinton. So he had a different exit strategy than the secondary suite people, or the people who are going to build properties. The next one is, what's a long-term vision? We use Graham as an example all the time because he's great at the BRRR strategy. He buys properties puts a little renovation in them, nothing very, huge, gets them appraised, pulls some money out with a refinance, and then does it again. He's done it 3 times in the same building.
Yeah.
And he still has another rental property in Arbor Lake.
Yeah. Oh,
He's
yeah.
got a really big home that he's renting out for $3,800 a month.
And you know what? The whole aim of investing is, the whole name of the game is to basically put your money into a property, add value to it. If you don't add value, sit on it, right? Let the market do its thing, and then release those funds. Only release enough that the rents still cover those costs, and then go again. And you know what? It's not a race. You don't have to do. We get people, I want to do 3 in 1 year. No, you don't. You don't. But if you do, we'll help you do it, right? Yeah. And Graham did 3 in 1 year. Yeah. So that's why we use him. But no, you don't have to be a Graham Jenkins. You can just take your time. You can actually move into one, fix it up as you go on, and then move out, rent it out. And then now you've got another property. And we've got people doing that. Yeah. Right? Okay, next one here.
Next one. Long-term vision, you can scale up to multifamily. We've got Russ on the left there and Toon, that's right, Toon on the right. They're into multifamily properties. Toon, he bought 2 sides of a duplex at the same time.
We sold.
Yeah. Because he didn't just want to buy one and work his way up. He had the funds that he had to, buy multifamily right away. Same with Russ on the left. He bought, that was actually a suited duplex, and then he legalized both suites, so it's a legal 4-plex now.
Yeah, it's just in ranch lands, and he would have picked that up just over 500,000.
Yeah,
I mean, we're talking, a few years ago, but now it's probably worth him. Legal 4-plex in ranch lands,
900,000. Yeah,
900, no garages, 900,000, and then Toon is in Southwood. I mean, this property, and the funny thing about this property, the basements were finished, I think, but not really. Not really. And he just didn't even care. Like he just kept renting them out. It wasn't even getting the rents. He just didn't even care about, but he could add value to this thing, and the numbers, Tim, would be roughly the same. Yeah. And he would make money off that. So anyway, multifamily is something that you can get into. You'd be releasing the equity again because you need a larger deposit. Yeah. And then going into multifamily.
Okay, the next one. What else can you do with your properties? You can sell a property to buy a business. So this is Julian here.
Yeah, Julian and Andrea, they bought a foreclosure in Silver Springs. We helped them with that. They were nervous as hell to buy it, but we took them through the process. We're going through another foreclosure right now. Tim, where did we go? Chaparral, to see that townhouse. There's a beautiful foreclosure down there that is, undervalued and for a young person. And foreclosures aren't for everybody. You need a team to help you with them because you can't normally have this one. You cannot have conditions. So you have to do all of the legwork up front. But the immediate profit on like a townhouse in Chaparral could be 30, 40,000. On this house here, I think this got appraised at 800,000. So his upside on this one was 300,000. And he had another townhouse in Silver Springs that they moved into this house from. Yeah. And we just sold that for a record price in Silver Springs. A record price in that development, and he used that money to buy. Julian is he's an electrician, and now he has his own company, and he's our electrician.
Yeah, he had an opportunity to buy into an electrician company, and he needed a sizable amount of funds to do it, and the only way he could do it is selling a property. So he sold the rental. Now he owns his own business.
Yeah, exactly. So you could use it for that, or use it to, there's many things you could use it for. Send the kids to university.
Yeah, well, we don't have that slide in here. No. But what's another thing you can do in the long term? You could renovate to add value. We've got many renovation clients, or even just clients that are buying older kind of beat up properties, renovating them, adding value so they can refinance. Our flippers are actually making a killing these days. Yeah. Renovating. We've got examples of a bunch of people here. But our latest ones that we talk about all the time, Kevin and Melissa, they just made 350,000. Well, the spread was 350,000 on their renovation.
Work was only 70,000. Yeah. So no, the numbers are there, and we didn't even get time to document that one. So that's how busy we've been. But you can see some locals here. I know Jeff Walters is on the call here. If you want to team up with someone, he's one of our guys for sure to team up with. He knows what he's doing. You can see I'm talking to him on the left here. He bought that property off the market. Yeah. He's one of our crew investors, got it off the market. We teamed him up with another joint venture crew investor that gave him 80 to 100,000, I can't remember, and they went ahead and renovated that one. So we're here to make it all work, make sure you get the right property, even if it's not on the market, and then make sure you find the funds. We're working with Calvert, as we just said, we're doing a flip up in Edmonton right now, and there's money up there. I mean, it's a long way to go, but you know what? If you're after something and it's out of your price range in Calgary, we can definitely help you out there. Calvert Home Mortgage is our go-to B lender or private money lender. I know Jeff has used them, and not only that, our guy who is our crew investor, who's on his second or third property right now, Ryan Day, he is our contact at
he actually works for
Calvert Home Mortgage
right now,
and he uses us to buy the properties for him. So to make sure that there's money in it to flip out and do it again.
A little bit of caution about private money though is the interest rates are very, very high. They usually come with some high fees up front, and you need to finish the project in a very, very short time frame. So if you're inexperienced, you haven't done any renovations or flips with private money, we would suggest partnering up with somebody who has for at least your first one, because you have to do this quickly and you have to be in and out with your money. Otherwise, the carrying costs on that money it'll just eat up all the profit in your project.
For sure. Okay, next slide.
Okay, next slide. Long-term vision. What's the best thing to do? Just don't stop. Just keep buying properties. We find that our investors that are really, really successful, they really enjoy doing what they're doing. They don't stop. They keep buying. They do buy with whatever they can, wherever they can.
So you know what? At the end of the day, you got to buy correctly. That's what it comes down to. It is the most crucial part of investing in real estate. We hear people, especially when supply is high, they get caught out. And where do they get caught out? They got caught out when there's too many condos downtown. They got caught out in new communities. We know that the new communities right now, people are moving here, so it's good. But as soon as that stops, they're the areas that dry up and people lose money straight away. So, you know, you got to understand where you're buying, what the demand is, and why the demand is there in the first place. That is the most important part to investing in real estate. And if you run your numbers, which we're running for you anyway, to make sure that the property cash flows, to make sure that we're aiming for 100% occupancy, no vacancy whatsoever. We want people lined up to rent your unit, and you want to get it rented, you know, straight away. At the end of the day, we're renting properties before we actually even own them for our clients. So that's how aggressive we are on making this work for our clients. But at the end of the day, we aim to make you or help you enjoy it so much that you end up at least owning $1 million worth of real estate apart from your house.
And on the left here, we got Daniel. He is currently looking for a suite of property. He already owns two. I believe he owns one with his dad as well. So he is constantly looking for new properties.
And he's buying a set.
And on the left, we've got Momodu. He is looking for an Airbnb condo unit right now. He just loves buying real estate. And we figure that over time, he's going to probably own 10 to 15 units. That's just how aggressive he is and, you know, how motivated he is to keep going.
But it only takes 3. We want to stress that. Don't think you have to get to 10 properties. Okay, next slide here. So before we get into this, I just want to shout out to a lot of people that participated tonight. We can see that there's a bunch of crew investors on there. Thank you for joining in. We haven't seen some of you guys for a while. There's too many names to actually say that. Just looking through the wall. Anyway, so if you haven't read our book, 1 Million...
Lewis is on there.
Lewis is on there. Lewis, we were talking about you last week. I think.
You missed last week's.
And then Connor was on there last week, so I think you heard us talking about him. But anyway, and then Richard, are you going to sell that house? I don't know if you're going to sell it in Canyon Meadows, but it will sell straight away. And there's a bunch of others on there that I can't get to. Anyway, if you haven't read our book, 1 Million Reasons to Buy Real Estate, it's free. Download it. It goes through the core fundamentals, especially if you're new to us. You'll see that we like to joke around with investing in real estate, but we also like to tell you the truth. We're going to tell you what we think. And you know what? Our aim is to make you money. That's it. And this book will get you started 100%. We do give you 1 million reasons to buy real estate. So download that for free. It's on our website, crewrealestateinvesting.com. And once again, if you are leaving, because not everyone stays to the end, go to work. All we really want you guys to do is go to work and tell your friends about us. It's free, and we get to make them money. And you know what? We've seen people, Tim, buy together as well. So you never know what comes out of it. The next book, we do sell it on our website. It is $20. It's called Fearless Real Estate. You can see all these people on the front. We kind of wanted to create a book to showcase more stories about what our clients are doing. And the reason why we do that is so you can see if it's for you. We have to stress this. Real estate investing isn't for everybody. Okay, it just isn't. You know, I've got a brother, he's never investing in real estate. He doesn't have to invest in real estate, but he's never investing in real estate. Where we read Rich Dad Poor Dad back in 2000, and I was like, holy smokes, I want to buy 20, 30 houses, right? And guess what? We went about it and we did some things wrong, Tim. Yeah. But we obviously did things right as well.
That's why we go through the stories of our clients, our current clients right now in this book, because they're doing things the right way. We made an awful lot of mistakes in the early years when we started investing in real estate, but we showcased what our clients did the right way and how they made a lot of money doing a million different real estate investing strategies. We go through every strategy there is in this book, and we've got clients doing every single strategy. So if you want to, learn from them, learn from their successes, pick up the book because it's a great read and it tells you, great success stories.
Yeah, the next thing we want to showcase to you guys is our course here. Now, people ask us, do you have to do the course to work with us? No, you don't. Okay, we didn't want to put this on anybody. The people that are doing the course are the people that are going to own 10 to 20 houses. Yeah. That's what we see, or they're doing this kind of, Tim, full time. They're either flippers, they're Airbnb. One person owns 17 Airbnbs, not owns them, rents them, and then sublets them. Yeah. So this is for people that want to treat it like a business. And when we say a business, it's really a part-time business for most of them, Tim.
Yeah, you're not going to devote 40 hours a week on this. But when you do it, you're going to see successes come very, very quickly.
Yeah. And so basically the $97 a month, similar courses we've done for $17,000. So when we say $97 a month, there is no pressure on your end. We're only doing $97 a month because that's our administration fee to keep you going. And basically, we didn't want to charge for this at all. But what you get out of it is 100 hours of content. It goes through something like, Tim, we counted the other day, 23 different investment strategies. And not only that, the best thing about it, you get us, you get all of our time when you want to have a phone call, when you want to have meetings. But do you have to do it to buy your next rental property? No, you don't.
Yeah. And the best way to look at our client successes is to go to our Crew TV channel. It's on YouTube. We have interviews, we've got walkthroughs, we've got examples, we've got everything that you need to showcase or to learn about the strategy that you want to invest in. If you want to do flipping, we've got interviews with flippers. If you want to do Airbnbs, if you want to do house hacking, Airbnb arbitrage, any kind of real estate investing, joint ventures, we've got interviews with the clients that are doing them right now.
Yeah, there's wholesaling, there's lease options, there's VTBs, there's agreements for sale. We could go on and on and on, but you know what? It takes one strategy and it takes taking action. We don't want to overwhelm you straight off the bat, but you know what? This real estate investing, I got to tell you, someone told us, we were in Vegas for the REMAX Awards earlier this year, and he said it was the cheat code to creating wealth. Yeah. And we thought that was the best thing ever because it really is. It's if you have the right team, if you're buying the right property, have the right team, and putting the right financing in place, it could be the easiest way to create wealth, and we want to share that with you. As you can see, we're genuine about it. We're not trying to sell anything here. We're just trying to make you money. If you think it's for you, simply the best way is to send us an email, book a meeting in. We're doing in person, we're doing online, and I'll put the website in the chat right now.
Yeah, the easiest way to get a hold of us is send us an email. We'll get back to you. We can set up a meeting either in our office here. We can meet you on Zoom, whichever one you're more comfortable with. But we can get you started. We can find out where you are right now and get you started on how you want to start your investing career, whether you want to start with one rental property, whether you want to do house hacking, whether you want to do Airbnb arbitrage, whatever you want to do, we can get you started.
Yeah, we hope you like the presentation. Please go to work tomorrow. Tell your friends about us. We're at 5,641 members. We are going back to live meetings in October. We just don't know where, but we are going back to live meetings. We can't wait to see some of you face to face. It's been a long time.
Yeah.
And that would be something so awesome to be part of if you can make it. We will be back in 2 weeks with a different topic. We haven't discussed which one yet. We will make sure it's entertaining like it was tonight.
Yeah, we really enjoy putting these things on. We want you guys to be as informed as possible before you go out there and buy some real estate. So catch us every 2 weeks. And if you want to get started, send us an email, send us a text. We'll be more than happy to meet with you. All right. Thanks, everybody.